introduce myself. I'm Melvin, and I'm the country manager for Benham and Reeves, Malaysia. And we have been around in Malaysia for about 6 to 7 years now. And of course, today we will be launching a very exciting development called South Hall Waterside by Berkeley Homes. And also we'll be sharing with you the latest market update with regards to what's happening in London and of course, London properties. And we have here in our panel today with us, my lettings director or my director of Benham and Reeves, Mr. Marc von Grundherr. Marc has been 20 years or 20 more years in the business and has been heavily involved in expanding the business of Benham and Reeves to today about 20 offices across London, and of course with our satellite offices across Asia. And of course, we also have here today with us Mr. Willis, who is the business development manager of Berkeley Group Singapore. And Rob has been quintessential in the South Key Plaza development and the expansion and the sales of South Key Plaza in terms of customer base and the successful launch and sales of it. And now Rob is now seconded to Singapore and is also the business development manager in Berkeley, Singapore. So without further ado, I'll hand over to Marc with regards to the market London update, on the market update on London. And then after that, Rob will share with us the development of South Hall. And then I will go through with you, of course, the units or the investment points of South Hall, or the units that we have specifically chosen, which are now eligible for the stamp duty savings. Of course, the stamp duty savings have just been announced for completions up to March 2021 or 31st March 2021. And then we will head on to the Q&A. So without further ado, I'll present the floor to Marc. Marc, can you take it from here? Thank you.
Thank you very much, Melvin. Yeah, good morning or good afternoon where you are in KL now. I'm Marc von Grundherr. I'm director of Benham and Reeves, based in London. And I'm sure I'm not alone in saying that having worked in property for the last 25 years, this year is definitely unique and will stand out as unique for a number of reasons. And obviously times like this are tragic, and our hearts go out to those who are suffering from this awful virus and also those helping us through the virus. But it's good to see today that things in London and globally are slowly reopening and returning to normality, with restaurants and cafes opening in London last weekend. So what I hope I can do for you right now is to cut through a lot of the hyperbole and actually talk about what's happening in London property at a ground level. And as an agent, or as agents, we are working from our offices again and seeing things through the perspective of developers, tenants, landlords, and investors like you from around the world. So just to quickly give some context, Benham and Reeves has been established in London for over 60 years. We have 16 branches across London and internationally 8 branches, including 1 in KL, who are there dedicated solely to look after our clients and help them with a full one-stop service. As an investor's agent, we're unique in that our KL office is on hand not only to sell properties, but to support our clients through the life cycle of property ownership, giving advice on investment and support in every area. So very briefly, as I said, what do Benham and Reeves do? Well, in a word, everything property related. We give investment advice, what to buy and where to buy. We do handover and snagging service, so you don't have to come to London. We can do that for you and check the apartment's finished. We can deal with furnishing the flat for you. You don't have to choose the items. We go and source them and install them in the property. We can do refurbishment, that's decorating or a new kitchen or bathroom if you have an older property. Then we can do with the leasing for you and the property management, so the tenants don't ever call you, they call us if anything goes wrong. And we even deal with tax returns, and that's for overseas investors who own London property, because whether you have any tax to pay or not, you still have to do a tax return, and we deal with that for you to minimize your tax. And everything that I've just talked about, we do in-house. Nothing is subcontracted, so we never get let down, and therefore we never have to let you or our clients down. So turning now to what's been happening in London, as COVID hit, the London property market froze. Demand for rental properties fell by 55% in March, and there was a 70% drop in buyer inquiries. But what may surprise you, if you look at the other way around, 45% of rental inquiries held up, as did 30% of buyers. But over the last month, as restrictions on agents were relaxed and the market slowly reopened, demand for rental and sales properties has definitely bounced back above pre-COVID levels. In fact, today, we're actually receiving just over 7.5% more inquiries than we did in February, which was very busy before COVID hit. And June was a surprisingly good month for us as we let more homes this June compared to 2019. And 65% of the lets we did were within 5% of the asking rent. And 50%, so just over half, were for lets of longer than 1 year. And interestingly, 1 in 10 of the lets that we did was for over 3 years. So on the day after the government's decision to reopen the housing market, the UK's biggest portal, Rightmove, reported its busiest day on record with more than 6 million visits to its listings, an 18% increase compared to the same day a year before. In fact, rental demand surged to see highest numbers of inquiries in 1 day since September 2019. Zoopla, who are another big portal, reported again for May dramatic increases in both lettings and sales inquiries, with the number of sales now at pre-COVID levels. And more importantly, demand for homes 46% above levels in early March. Another indicator is HMRC, and the latest figures from HMRC showed house sales jump 16% in May, which is another sign that the London market is fully back to life. If sales continue at this rate, supported by the low mortgage interest rates, then prices will rise much faster than predicted. And last week's announcement should make them rise even faster, with the government scrapping stamp duty up to £500,000, meaning that everyone who buys a property by the 31st of March 2021 will save up to £15,000. Yes, investors will still be liable for the 3% stamp duty for buy-to-let properties for an additional property, but it's still a £15,000, up to £15,000 saving, which is pretty fantastic. And I really believe this is going to encourage people to move, and that will help transactions and prices. And this additional support for the property market will help the wider economy as a whole. And so for those who are actually considering an investment, this is the perfect and frankly unique time. Borrowing was already cheap, but it's even cheaper now because of COVID-19, with Bank of England base rates having never been lower. They're 0.1% today. And unlike the financial crisis of 2008, banks are fully capitalized and they want to lend. And with global markets in turmoil and money in the bank actually losing value when inflation's taken into account, property yields of 4 to 5% look increasingly enticing. Sterling, which had never fully recovered from the Brexit turmoil, has taken another hit. That means that overseas investors can benefit from a sterling discount of up to 30% today, effectively enabling you to buy at the 2014 exchange rate. Another change is from April next year, overseas buyers will have to pay an additional 2% stamp duty. So because of that, this was already creating pent-up demand, with many planning to beat that April deadline. They're now starting to pounce, but with last week's announcement of stamp duty holiday, people are even more focused now, and we urge clients, if you aren't thinking about buying, now is the time to do it and get your completion in before the end of March. So you save the stamp duty and the additional stamp duty for overseas buyers. Meanwhile, developers are also now offering good discounts. Many have completed units that have built up during the lockdown period, which they need to sell in an increasing buyer's market. So there are good deals to be had. But let's not lose sight of what really matters. London has proved time after time that it's an extremely resilient city. be it in the face of recession, terrorism, or illness. Property has always been the safe haven, and nowhere more so than London, which stands out as the world's capital city. For a number of reasons. First, there's business. There's been massive post-Brexit investment by international giants like Bloomberg, McKinsey, Citigroup. Second, there's finance. London has the highest concentration of financial and professional service firms in the world. Third is tech. London has a very strong tech sector, with Google, Facebook, Amazon, Apple, and Snapchat all announcing new headquarters in London. One interesting fact is that more people now work in fintech, that's financial technology businesses, in London than in Silicon Valley or New York. The next reason is education. That's the fourth reason. London is the leading academic hub. It's consistently ranked as the world's top student city, with over 450,000 overseas students studying in the UK every year. Fifth is the rental market. 1/3 of London households today live in private rented accommodation. And that's a huge shift that I've seen in my 25 years. And it's only going to increase further. PwC, the accountants, forecast that by 2025, in 5 years' time, that number will have crept up to 60% of Londoners renting. Sixth is the economy. The UK is the world's 6th largest economy, and London's economic growth is double that of the UK. And things are going to get a whole lot better with the completion of the incredible Crossrail project. And at Benham & Reeves, we are optimistic because this is a market with sound, long-term fundamentals. COVID is a crisis with no doubt, but it does have financial implications, but it's not driven by finance, as the banks are fully capitalized today and keen to lend flexibly. More importantly of all, and this is really crucial to create some context at a time like this, never in London's many centuries of history has there been a crisis from which markets and house prices have not bounced back stronger. And that includes the Spanish flu of 1918, the Great Depression of the 1930s, the stock market crash of 1987, 9/11, the credit crunch, and even Brexit. The market is now returning, and I firmly believe this is a time of opportunity and indeed a great time to invest. There's low interest rates, discounts, strong rental demand, cheap pound for overseas buyers, and finally the stamp duty holiday. As I love this quote from Warren Buffett, as I've got on the slide, widespread fear is your friend as an investor because it serves up bargain purchases. Whether we're talking about socks or stocks, or even property for that matter, I like buying quality merchandise when it's marked down. And there's never been a time in history that London property didn't bounce back from being marked down. So just quickly turning to our forecast for the UK, for the property market in the UK. For sales, UK house prices increased by 2.4% over the last 12 months, which is up from 1.4% at the start of 2020. Zoopla saw asking prices for sold homes in May 7% higher than last year, with a 34% increase in agreed sales. The revised forecast for London for 2020 is flat, but with a forecast of 2 to 3% in Q3. And over the next 5 years, average predictions across the market are anywhere from 13 to 18% growth in London sales prices. On the lettings front, forecasts are for a 15% in London rents over the next 5 years, taking into account the prediction of 60% of Londoners renting by then. I'm not just optimistic in my professional capacity, but also as a private investor, where I continue personally to look for value, both for myself and for our clients. And I really believe this is a wise time, not just to hold property, but also to pick up some really good value. It's important to target your investment. London may be a single world, but within it there are 32 different boroughs, different cultures, and different property profiles. Property investment hotspots have been created, especially with Crossrail, now the Elizabeth line, which will dramatically reduce travel times and increase London's rail capacity by 10%. With a combination of lower prices, higher yields, and greater capital appreciation, this means we now look at investments outside of Zone 1 with a big focus on regeneration areas. Regeneration is about creating new places where people want to live and work. And Berkeley Homes, well, Rob's joined us today from Berkeley, are one of the UK's leading property developers. They're famous for placemaking and building superb homes in regeneration hotspots. This all translates into capital appreciation for investors that buy into the vision, and particularly for those that buy early in phase 1. And one such example of a regeneration project is Beaufort Park in northwest London. This is one of my favourite developments. With over 3,000 homes built over a 15-year period. It's not finished yet, they're continuing to build. And we've been there on site since we opened a branch in 2010. And we've seen the site grow in terms of popularity, rentals, and capital gain. And investors who bought in phase 1 and saw the vision at the beginning and joined us because we invested ourselves here at that stage, paid on average £335 per square foot. Today, they achieve around £700 per square foot. That's a phenomenal 110% gain, which is complemented by yields of 8%. And that's a gain on the value. So if you've got finance, your returns would have been amplified. A second example is in southeast London, Royal Arsenal. It's again another Berkeley scheme. It's part of a £1.2 billion regeneration project over a 30-year period with 2,500 homes and a new crossrail station being built on site. Again, investors in phase 1 paid on average £275 per square foot. And today, they achieve over £700 per square foot. That's 150% gain. Plus, they've had yields of almost 9%. And even during what's been happening over the last 5 years with Brexit and all the uncertainty, both of these developments have seen 22% capital growth. And the story in both of these cases is choosing areas where tenants want to live and can afford to live, which in turn creates strong returns, both in terms of rental yield and capital growth. So this brings me nicely to our exclusive launch today. A whole new London neighbourhood is being created in the West London Borough of Ealing. It's one of London's most ambitious regeneration projects, bringing a vibrant new village full of gardens, parks and piazzas, and it's all just 17 minutes to Oxford Street and 30 minutes to Canary Wharf. Because, like Royal Arsenal, there will be a crossrail station right across the road. This is an excellent opportunity. It's phase 1. It's in a regeneration area with a great developer for a relatively low entry price. Now, I'm so confident in Southall Waterside and then it's going to become a new West London hotspot that I've actually already reserved a home here myself. And with 4.5% yields coupled with forecasted capital growth, that has all the ingredients of a great investment. So now let me pass over to Rob from Berkeley to talk about this wonderful scheme in more details, and I'll be back at the end if anybody has any questions. Thank you very much. Rob, over to you now. Rob, you're on mute.
Yeah.
Perfect. Thank you.
Sorry, it wouldn't let me unmute there for some reason. Good afternoon, ladies and gentlemen. Thank you for joining us here today. As Mark said, I'm Rob here from the Berkeley Group Singapore office. I'm here to give you a bit of an overview into Southall Waterside, one of London's biggest and most important and significant regeneration projects. ultimately, where is Southall located? Well, Southall is located in the London borough of Ealing, essentially in between Heathrow Airport and Ealing itself. It also has fantastic infrastructure to get into central London already on the National Rail network. On top of that, it has fantastic access around London and into central London on the M4 by car, as well as the M25, the ring road around London itself. As I said, we have fantastic infrastructure already at the development, but we've also got the Elizabeth line coming to the development, which will be opening next year. What this will mean is that Southall waterside will have unprecedented access across central London. You'll be able to get to Heathrow Airport in just 8 minutes. You'll be able to get to Paddington in 14 minutes, Bond Street in 17 minutes, Liverpool Street and the CBD in 24 minutes, and Canary Wharf, the financial centre of the world, in just 31 minutes. So this accessibility across London is fantastic, on top of all the other infrastructure that we have around there, including Heathrow Airport. So what this essentially means is all of the world, or many of the world's global companies are going to be easily accessed from Southall waterside. Heathrow Airport, where we have British Airways, KLM, Virgin Atlantic and Etihad, is just 8 minutes away. We've got Paddington, where you've got the likes of Microsoft, Vodafone and Visa, just 14 minutes away. Tottenham Court Road, Google, UCL, Facebook and Reeves are located there, just 19 minutes away. Not only that, you can drive to Stockley Park in 23 minutes, where you've got Apple, Toshiba, Canon and Sharp. Slough, where O2, Mars are located, in just 30 minutes, as well as Canary Wharf, where the headquarters of HSBC, Barclays, Clifford Chance, Credit Suisse and many other banks are located. Not only that, going out further west is also extremely accessible, where you can get the likes of Reading in just 37 minutes, where you've got Huawei, Deloitte, Cisco and Oracle. So a little bit about Southall waterside and what we're bringing to the development. As Marc said, this is a regeneration project, and ultimately it's going to be a 25-year build project. We're going to invest over £1 billion in the site, which is going to generate over 21,000 full-time jobs. Once we have completed the development, this will be one of the most biodiverse developments in the UK, where we're going to have over 13 acres of parkland and open space across the whole site. We're going to plant 2,000 new trees, and we're going to have 2 new bus services throughout the development as well. But what's important to remember is not just about the new homes that we're delivering a new community. There's going to be new leisure, retail and entertainment facilities, over 500,000 square foot of office space, commercial and leisure, as well as a new hotel, pub and local primary school. So in total, it's an 88-acre site. There's going to be over £1 billion invested into the area, and there's going to be a 500-meter park running through the center of the scheme. As Marc said, it's fair to say we've seen it before. Regeneration plus the Berkeley effect leads to increased price growth. And as we can see here from the 3 sort of graphs below, we can look at 3 regeneration projects that we've already worked on and continue to work on across London, north, south, east and west. So we've got Royal Arsenal Riverside in the east, where in 2010, the average price was £250,000 for a property. By 2018, this was close to £600,000, and today we're closer to £700,000. At Woodbury Down, in 2012, the average price of a 1-bedroom flat was £275,000. By 2018, this was up to £540,000. And the important things to see here is that, that is a 96.4% increase in 6 years. But the important thing what we see is that the Hackney average went up 42.3%. So here you can see how regeneration goes above and beyond normal market conditions and the standard property market increases that we see. And finally, Kidbrooke Village, where we've seen an increase of 73% to 108% in our Manhattans to 3-bedroom apartments between 2010 and 2018. On top of that, it's also the opportunity that we have around the surrounding areas at Southall. As I said earlier, it's in the London borough of Ealing, and Ealing is a very affluent and essentially established area of London itself. In Ealing, you're currently looking at property prices just below £500,000 on average. And in Southall, you're looking at just under £300,000. So what that means is there's certainly a good opportunity for increasing in prices over the next few years to catch up with its neighbours around it. So what are the 10 main reasons that people are investing in Southall waterside at the moment? Well, one of the main reasons is because of it being one of London's most significant regeneration developments. Ultimately, Southall waterside will be a place like no other, a place to live, work and socialise, and a place full of gardens, parks, trees and water. At Southall, you'll be able to shop and eat at restaurants as well as have entertainment, cafes and culture. All of this on the development and with central London just 14 minutes away as well. Number 2, the investment opportunity. As one of London's most ambitious regeneration projects, there is good opportunity for strong capital growth, as I have already alluded to in the earlier slides. Of course, the Crossrail. This is the biggest infrastructure project in Europe, and we have spent billions and billions of pounds on this, and it's going to completely transform all places along the Crossrail line. Right now, it's not a tangible asset. It's something that's coming, something that's going to open next year. And as and when this does open and is something that we can use, it's going to transform areas like Southall and continue to push up the price in areas like this. As I've already mentioned, it's not just about the homes that we're delivering, it's the community that we're building. And ultimately, there's going to be entertainment, restaurants, retail, recreation, office space, supermarkets, hotels, all on this development. It's going to be a self-sustainable development that you don't need to leave to go to work or to buy your grocery shoppings or to do your dry cleaning. It's all going to be self-contained on the development itself, which is essentially what a lot of people are looking for in this day and age. Also the parkland. You know, when you buy in central London, you have areas of parkland, but at Southall waterside, there's going to be a huge amount of parkland that you can enjoy. Of course, the 30 acres that we're delivering, the 90 acres Minette Country Park next door as well. And ultimately, we're going to create one of the UK's finest examples of urban regeneration that puts biodiversity and nature at its heart. So to have this much outside space, but be in the centre of Zone 1 central London in 14 minutes is really appealing to many people. Of course, at Berkeley, we are a luxury developer. We build, fantastic homes where people want to call home. And ultimately, we'll have fantastic residence facilities here at Southall waterside, the likes that you would expect for Zone 1 properties. You're going to have a lounge, a luxury spa, a gym, a 24-hour concierge, electric car charging points, cycle stores, as well as a car hire club. So you don't have to necessarily pay for the car parking space as well. It's also going to offer waterside living. We're going to regenerate 1.2 kilometers of the Grand Union Canal. And once complete, we're going to have a canal-side community where we're going to have restaurants, a place where people can come together and enjoy Southall waterside for everything that it has to offer. Of course, the Berkeley quality. We're renowned for the quality of our development and the quality of product that we use. We've spent the last 5 years coming together with a perfect master plan for this area, and we are going to implement the highest quality of goods within the apartments and the quality of the homes that we're going to build. We're also a trusted developer. We've got a very strong balance sheet. We've got over £1.1 billion in the bank. We're a FTSE 100 listed company. And that means when you're investing from Kuala Lumpur into London, it's a long way away. You can be confident that we're going to deliver the properties that we say we're going to deliver. Not only that, we offer a 10-year warranty with a 2-year policy on all of the white goods within the apartment. And you're also going to have a customer service team that are on hand 24 hours a day to answer any inquiries you have. And that's from reservation of your property until 2 years after you've completed on it. And finally, it's designed for life. Sustainability is the core of our company, and that's certainly the case here at Southall waterside. We're going to have 100% low energy lighting. There's going to be water saving fixtures, rainwater harvesting, green roofs, recycling throughout the development, as well as the new fitness trails, 1 kilometre of new canal frontage, and of course, electric car charging points throughout the development. So how does the development look as a whole? So essentially, this is where the whole development will be located, as you can see highlighted here on the map below. You've got the crossrail at the top of the site to the east here. And then you've got a retail, leisure and entertainment facilities marked out here in the orange area here. Phase 1 is located in the green marked out area here. And where we have availabilities today are in the 4 closest blocks, essentially, to the entrance to the train station. So a great opportunity there. And they're also located right next to all the convenience that the retail, leisure and entertainment facilities will offer as well. So what does phase 1 consist of? Well, it's essentially 4 different blocks. We have Sibley, Watson, Arbour and Edwin House, where we have availability of studios, 1, 2 and 3 bedrooms. And as Marc said earlier, we have the opportunities of properties that complete before the new stamp duty, well, within the stamp duty holiday that's recently been announced. In terms of the interior designs, these are what we call turnkey properties. All of the major fixtures and fittings are going to be included. Your lighting, your flooring, all your major appliances in the kitchen, your washer dryer, all of these will be included in the development. So they're ready essentially almost to be let out from day one. You just need some of the soft furnishings such as the bed and the dining room table, for example. Ultimately, our studios start from 297,500, which, considering that's located within Zone 4 of London, that's the cheapest opportunity we have across our 70 development portfolio in London available today. We have 1 bedrooms from 370,000, 2 bedrooms from 462,500, and 3 bedrooms from 652,500. Here is just a couple of examples of the bathroom design in Sibley and Watson. And on that, I'll leave it to Melvin to take you through a couple of choice units that they've selected to show you today.
Thank you very much, Rob. And yes, so today we have selected for you guys certain choice units that we have done up. And some of the questions are like, are we eligible for financing for this development for Malaysians and all that? So we have selected a few units and what are the view lines and all that. So first up, we have the investment size unit, or many of the ones that people like to invest in, is the suite. Yeah, it's level 1, west facing towards the internal courtyard, and asking price is about £300,000. So it's a studio. Estimated studios for rents is about up to £1,200 per month or per calendar month, and squarish unit, courtyard facing, and this should be letted out very quickly. And what we have done here, if you can see from my mouse, the property price is £300,000. We have a loan of both loan to value of both 55% and 75%, interest only. So of course, 55%, you put in a little bit more cash deposit, where you put in £135,000. But we are taking advantage of the low interest rates now. We have mortgage brokers which can assist on this. Yeah. And estimated weekly rent of about £250. This, we are being a bit more conservative, but we are happy and we think we can achieve more. Just a good note is that Benham and Reeves will also be having our offices nearby or even on site, and our directors themselves have personally bought about 5 units here. Estimated monthly rent, and then you get your monthly repayment, you get a cashback every month, a surplus of £718. This is an interest-only loan where you can use and park it there and use it for your cash flow in terms of your monthly cash flow coming in. And of course, we have a 75% loan-to-value ratio, initial rate at about 4.1% in terms of interest rate. This is a higher amount. We're just doing 2 comparisons. And as you can see, you will get a cashback of £290. Now, this is across 25 years loan. And for those who would like to buy in to live, buy in to stay, we also have loans that are principal plus interest at 2.59%. And if you take a 55% loan, your initial payment every month, if you were to live in it, yeah, it's about £750. Now, that equivalent to Malaysian ringgit, it's about 4,000 ringgit prepayment every month. And now this is to own and live. If you have children going there who like to study in the universities there and like a place to stay or even work, yeah, this plan would be ideal for you. And likewise at 75% with about 3.36 interest, which is low in terms of comparing to what we're getting here in Malaysia. Yeah, you're paying about 1,000 over pounds every month. So that's about 6,000 ringgits. Now, that is every month, monthly repayment to own a property in London. So the suites have been very popular, particularly with buy-to-let investors, because it rents very, very well. And of course, next, yeah, we would have the next one, another suite with courtyard facing yourself, and all this we have chosen with the beautiful views. Similarly, you will get the returns as the same loan structure, same loan margin. Yeah, as you can see, it's about £751, £300 return monthly, and you pay monthly if you're to live in it about £780 or about 4,000 ringgits to about 6,000 ringgits if it's a higher loan to value ratio. Yeah. So this is a one bed, okay, and it's estimated at about £387,000. This would be a west-facing one bed, again squarish. If you can look at it, the floor plans is very well designed with a full living area, with a balcony, with a bedroom, and sort of an ensuite, not entirely an ensuite, but you can come in here, and it's sort of, you get your privacy in the bedrooms, and also in the living area, a full-fledged open style kitchen, yeah, and again, beautiful open courtyard views. It's about £387,000, and rents up to 1,300 per month or per calendar month. So with this, again, a 55% loan at 2.59% interest rate, yeah, you will get a cashback of monthly about £815 or about 4,000 ringgits. At a higher loan to value ratio and a higher loan interest, yeah, you get about £260. So if you want to cover your ground rent, your service charges and all that, usually we would advise to get at least about 65% loan to value ratio, and your cash surplus can then, the property can then pay for itself. Yeah. And of course, if you are living in it, you will be paying about £965 or about 5,000 ringgits, likewise about 6,000, 7,000 ringgits, as this is a one bedroom, it's a little bit bigger. Now, the prices that we are quoting here is a little bit, it's before discount. So of course, we are happy to negotiate on an offer and acceptance basis at this current period. And this would be a 2-bed, 2-bath, full courtyard facing, again at 760 square feet, huge, large, private living and dining area with an open concept kitchen. Bedrooms are separated. This works very well for rentals or tenants, of course, because they get their privacy. This is sort of an ensuite, and of course, the second tenant can then be here. 2 bedrooms, you get a choice of purchasing a car park. Yeah, and again, if you were to rent this out, your rental is up to 1,750 per month, and this would be your rental surplus if you're taking a interest-only loan at 55%, 2.59% interest rate. And if you're taking a higher loan at 75% at 4.19% interest rate, this would be your cash surplus. And if you were to choose a 2-bed, 2-bath to live in, yeah, it's about 1,200 pounds. Yeah, if you are to put in a little bit more money, you will be paying about 6,000-7,000 ringgits. Or if you take a little bit more loan, this will be about 8,000-9,000 ringgits to live in a 2-bed, 2-bath apartment. Now, comparing to prices in Malaysia, this is not really different, much difference. We are paying the same in our apartments and all that here. What I'm trying to illustrate is that with this amount, you can own and live or invest in London, and we can assist with the mortgages as well, primarily for this development. And of course, illustrating what you are saving in terms of this stamp duty holiday, a lot of people are asking as well. So in the previous stamp duty calculation for buy-to-let investors, this would be the scale, yes. For the first £125,000 is at 3%. For 125 to 250,000 pounds is at 5%. 250 to 925 is at 8%. So what they have announced now, for those properties who complete on or before March 31st, 2021, any properties up to £500,000 will be on a scale of 3%. So, and then subsequently 8%. So previously, if you were to purchase a property at £300,000, the old rate, you'll be paying 14,000 stamp duty. The new rate, if you're purchasing the same property at £300,000, yeah, you'll be paying £9,000. So you get a saving of £5,000. Now, of course, this is a cap. Everything is capped at 500,000, where the max is 500,000 here. So if you buy something at £500,000, you will save up to £15,000 in terms of saving. Whereas last time you'll be paying £30,000, now you're paying £15,000. So it's a saving of £15,000. Again, this is cash in pocket. You can use it for the furnishings and all the other expenses that you need to be paying for the property. And of course, we like to illustrate, and this is a Berkeley scheme as well. Why we have included this inside here is, or a trivia, one is a CGI and one is a completed property. Now, this development is in northern London. Yeah, it's a Berkeley scheme. It's called Smithfield. So for Berkeley homes, what you see is what you get, and even to the tree, it will be included. So the trivia is that we asked our clients to choose which one is the real property, which one is the completed property, or which one is the CGI, which one is the completed property. So this would be the CGI where we are marketing from the brochures, and this is the completed property. As you can see, everything is on the dot. So sometimes, you know, you're buying off the plan, it's first start. We say that how it will look like when it's completed, but with Berkeley homes, you don't need to worry. Even the tree is exactly to the dot. If they say the tree is there, the number of pillars will be there. It will be there, and it's exactly the same as the brochure. What you see is what you get. This we are not creating. This is where we went on site to take the photo and we compared the CGIs. Yeah, of course, with this scheme, it's a 999 years leasehold. You get a right to park, or to purchase a right to park with a 2 or 3 bedroom apartment. Service charges are at about £3.70 per square feet per annum. And of course, you have all the full-fledged facilities, which then tenants want to go to or want to rent, because it's a flight to quality. Of course, the more facilities you have, the tenants would be more inclined to rent your apartment. And of course, you have your combined heat and power cost, and a ground rent of about, for 1 bedroom, £300 per annum, two bedrooms, £350 per annum, and 3 bedrooms at about £400 per annum. Yeah. And of course, the reservation procedure is very simple. Call us, speak to us, or after the webinar, call the number or email us. Yeah, it's about £2,000 reservation fees for properties up to £750,000. So generally, you will be paying only £2,000 reservation fees for this scheme. Yeah, and of course, it's 10% upon 6 months. First 10% payable within 6 months of exchange of contract, another 5%. And before that, you also have to pay another 10%. So 10%, 10%, and 5%. So total 25%, and 75% balance to be paid at completion. So the schemes that I've showed you earlier, the units that I've showed you earlier, are eligible for the stamp duty savings. Of course, if they complete before or on March 2021, yeah, 31st March 2021. So that ends our presentation for today. What we are going to do now is we're going to go in the Q&A. I see there are quite a little bit of questions that have been coming on from the participants. Yeah. So the first question would be, I think this would be more for Rob. When is the commercial hub completing for this particular development or for this particular scheme?
Yeah, so the commercial hub and all the facilities and you know, a lot of the commercial hub will be coming on from Q2, Q3 2022. Okay.
And second question is, can Malaysians get financing for this project? Yes, yeah, you can, and you can look us up and speak to us. We have mortgage brokers on hand to assist on the financing from multitudes of banks, and we can assist on that, and that's why we have done the simulation.
But I think just breaking in there, I think there's finance available for Malaysians, not just from Malaysian banks. You don't just have to borrow from Maybank or CIMB or UOB. The Singaporean banks are all open. The UK banks, as when I said in my little chat at the beginning, all the UK banks will loan to Malaysians, and it's very simple, and rates are incredibly good at the moment, as Melvin showed, but you can easily get finance, whether it's from HSBC or NatWest or Barclays. they're all open, and the market has fully returned now with valuations getting done, and there's no problem. So it's really simple and it's easy.
Okay, and the next question would be, when is the Crossrail opening for this development, since there's a Crossrail sort of on site?
Yeah, the Crossrail at the moment is slated to open as of autumn 2021. So about a year off, just over a year off. In terms of all the infrastructure, it's all there. All the tunnels have been dug. The trains are, the trains are there. The stations have been finished. It's just about essentially the testing now. And of course, COVID-19 has put a little bit of a break on that. But autumn 2021 is when it's predicted to be open.
Okay, thank you. Why should I buy a new build when I can buy a 3-bedroom around the corner for about £400,000?
I mean, it's like buying anything
That's
new.
your one, Rob.
Oh, well, you can go, Marc. More than happy.
No, you do it, Rob. You do it.
Yeah, I was just saying, I mean, it's like, ultimately it's about the offering that Southall Waterside brings. Not only, you can get something that was built in the 60s, 70s, 50s, 1900s around the corner, but ultimately the benefit of, buying new build is everything you get with it. Everything in the apartment is brand new. You get all those facilities that people want, like your gym, your spa, your 24-hour concierge, all of the landscaping. And essentially, it's a place that people want to call home, and all the amenities that you're going to have on site, it adds to the convenience of the area itself. It's very much like buying, anything new over anything secondhand. It's nicer to have something that is brand new. Throughout London, no matter where you look, you can try and find something for a bargain price. But often that can also come with issues as well. You can have subsidence, the roof needs to be redone, and these can be sort of hidden costs of hundreds of thousands of pounds that come to sort of bite you down the road. Ultimately at Berkeley, any development here, it comes with a 10-year NHBC guarantee. So anything structural, you have peace of mind for over 10 years. And anything inside your apartment comes with a 2-year guarantee. So, anything like the flooring or the white goods or any of that breaks for 2 years, we're on site there to come and mend it. So it gives you that peace of mind.
Okay,
I agree with you. And I think actually the other interesting thing is actually tenants we find that traditionally 20 years ago, tenants would want, when they come to London, if they're from overseas, they used to want a quaint little house or a little period flat, and not so many who wanted concierges. Today, 90% of tenants want to be, obviously if they want a house, that's different, but if they want to be in a flat, they prefer somewhere that's got some form of security where someone can get packages for them, because if they're at work all day, who's gonna let in the dreaded Amazon man, and who's gonna let in the man from DPD and all of the delivery companies? If you only have a letterbox and you're working all day, there's no one there. So actually a huge shift that has been towards newer developments which have these facilities. Of course, gym is really popular, cinemas are really popular, and pools. All of these are nice extras, but it's the concierge facility that people really want, and we see it. 9 out of 10 inquiries say I want to have a concierge. So while it can be cheaper, it's often cheaper it's often cheaper to start with. But as Rob said, obviously all the benefits that you get from buying brand new, but it's actually when you come to rent it, it's going to be more difficult. You're going to get much less rent, so your yields will be the same, and it's just more maintenance. All of the money, the houses and older flats that we manage, the maintenance can eat up anywhere from 10 to 20% of your income, and again, that's a really important factor to take into account. So that's one of the reasons. I mean, personally, I live in London, I'm used to it. My house is obviously old, but everything I buy for investment, I always buy it new. It's just so much easier.
Thank you, Marc. The next question is from Miss Rita Vasudev from Facebook. Are properties more expensive for overseas investors?
That's a good question.
Yeah, it's a good question. Ultimately, no. Not for us here at Berkeley, or really for any developer. The price lists, are global. We have 6 international offices, plus our UK offices, and there's essentially one price list for each development that works globally. Now, do prices get moved as sales increase? Absolutely, but they're moved across every price list globally. So ultimately, there is no difference for buying in London or buying as a Londoner to buying in internationally or from KL or Singapore or anywhere internationally. All the same rules apply, and that also is the same for tax. For example, there's no tax implications for buying as a foreigner, certainly at the moment, for buying as a foreigner or buying as a UK purchaser. If I want to buy, I pay the same taxes as anyone else does around the world.
Okay, I think next question is with the working from home effect now, will it affect the buyer's behavior, and are two beds more popular now with people working from home?
I think that is an interesting question, actually. I'll take this. You guys, I'm sure, have got answer as well. But the thing that we're seeing as a business is we are getting increased numbers of people saying that, well, obviously there's been big talk about working from home and everybody working from home. What that's driven is, of course, people want more space, but London is expensive, and therefore space comes at a premium. And the further out you go, the longer the commute is. You don't get the benefits of living in London if you go further out, because a lot of people want to live in London because of the theatres, the life of living there, the restaurants, the bars, the actual ambience of London itself. It's not just about commuting. And if you want more space and you move out, then you lose all of that. And a lot of people, they live in London because they want to be in London. That's why I live in London, because I love living in London. I wouldn't live anywhere else. I could live outside in the country, but it's not the same. But what we have seen as a business in terms of inquiries is, yes, we've got a few more people saying, I want a bit more space and I don't want to be so centrally. But actually, the biggest driver has been, I want some form of outside space, something that has a balcony, maybe a little garden, maybe a terrace, or they're within a development where they've got greenery on site, and that's what a lot of central London struggles with. A lot of apartments don't have any outside space, and may not be far from a park, but you don't have a private form of outside space you can go and sit in, and not be cooped up at home if you're working from home 5 days a week, or even if you're going to be working 2 days a week. And I think that's been the shift we've seen. Yes, people will, of course, if you can afford a 2-bedroom, so you can have a room as a study or as a spare room, of course you're going to have that. But if you're spending your budget for your own, for whatever you need, generally you go for the best flat you can afford to accommodate your space. No one would rent a 4-bedroom house if they're a single person. So I think, bearing that in mind, I think the market will not change, and you will still see big demand in London generally, but I think there'll definitely be a shift towards some form of outside space. Don't you think? I think that's the case, surely, for Berkeley too, Robert.
Yeah, no, absolutely, and I think ultimately, people are going to afford what they can afford, whether or not that's a 1-bed, a 2-bed, a 3-bed. And I think you may see some people coming out slightly further areas so they can get a bigger apartment. For example, choosing to come to Southall rather than Ealing Broadway because you can get a 2-bed rather than a 1-bed. But as Marc says, it's about having outside space. All apartments at Southall have a balcony or a terrace. And I think that is key. And ultimately, I think, there's been a lot of research done into the world moving from a kind of work in the office to working from home. And, from this research, of all the people they asked, only 4% of people said that they want to work in the office all the time. But on the other hand, only 4% of people said that they want to work from home 100% of the time. So what you've got is people wanting to have diversity in their lives. And what this means is you need to have an apartment or a house or a place you're living where you can easily get to the office, but also, have a great place at home. And this is where something like Southall really comes in. You've got all this green space, but if you're working even in Canary Wharf, zone 2, the other side of London, it's only 30-minute commute. That's with an average commute in London of 50 minutes generally. So you're under the average commute even to get to the east of London. If you're working in Paddington, just 14 minutes into the office, into Zone 1 Central London, but you can live in a 2-bedroom, 3-bedroom flat with all this outside space, with all these amenities, for significantly less than you would be paying in Central London.
Okay, one final question. I think we have gone a little bit ahead of time. As an investor, I think this is more for Marc. what was the special points of South Hall that attracted you to invest in South Hall? And are there any drawbacks in South Hall, if not at all?
So what attracted me to buying South Hall was, so whenever I look for buying something, as I think I touched on in my talk at the beginning, is I look for something that, number one, has something extra that's going to add to the property working for me. And what I mean by that is, I don't just want to buy any old flat in any old development and watch the market move up, London prices move up. I want my money to work harder for me. So I want to buy in something where either the developer's working for me indirectly because they're building more homes, they're pushing the prices up, they're innovating, they're bringing things to the area, the development, that's going to help make people want to live there and drive prices. And that's why I really like regeneration schemes, because if you buy at the beginning, right at the beginning of phase one, which is what we're launching today, and this isn't just a push for this, it's the truth, I will only buy at the first launch phase one. That's the only thing I ever buy, because I know that whether they're building 500 units or 5,000 units, the developer will be doing whatever they can to keep pushing the price up and maximize their profits. And because of that, okay, maybe I can't get the same price that Rob can get at Berkeley when I bought because I'm secondhand and I'm not selling off plan. But I will benefit from what they're selling because my flats will be less than the full marketing price they're getting on the next phase, but it will be above what I've paid and certainly above the rest of the area. So number one is that I always buy where I'm getting someone else, there's something else helping me drive it. Number two, I like regeneration and large scale schemes because the area is usually a bit unloved and people don't really like the area. And that's the same with Southall in general. Prices are limited to what the local market is doing. Whereas when you have a regeneration and you get rid of the factories and gasworks, which what this was, or the car park, which this was, and you get rid of all those facilities, you have this open canvas to create something really different and that people today really want. As I said, Rob talks about the gardens and all the facilities that are coming. This is what people want today. And if I bought at the beginning, and there's going to be a bit of construction for my tenant for the course of the next 2 to 3, 5 years maybe. But when I come to sell in the medium term, because I always hold for medium to long term, if I sell in the medium term, all of the area around where I bought within this development will be finished. And so people will come into a created, already built environment, and therefore I'll have already seen capital gain, irrespective of what the general London market is doing, which we forecast is going to grow. But irrespective of that, you have the Berkeley effect or the developers effect, which pushes prices up. So I think those are the two factors. And the third factor, just on pricing, is that I always try and buy something, whatever I buy, that I want when I come to sell it and when I come to rent it in the interim, I want to put off the least numbers of people. So by that I mean, I don't want anybody to say, well, this is really nice, good price development, but it's a 20-minute walk from the station. That puts people off who need to commute. So I always want to be near a station. I always want it decorated neutrally. I always wanted to have, a view on something that's not horrible. I'd rather spend that little bit more so that my unit is as good as I can within a budget constraint. So therefore, I know on this unit, it's near the station. Yes, it's going to have construction because I bought in phase one. So my rent is going to be a little lower. But because my rent's going to be a bit lower and it's on top of the station and facilities coming, it'll be easy to rent. And then it's phase one. So then when I come to sell it, I've had a tenant in there for hopefully 5 years, maybe even longer when I come to sell it and exit. And I will therefore get the benefit of it being near the station. It'll have it's got a view of the garden, has all the facilities there. So it just helps you. It helps you make money, not because of what the market's doing, just because London prices are going up, but because the development itself and the developer is indirectly working for you, helping your money work for yourself. So that's the reason I bought here. And I thought it was the most interesting and low value. 1 bedroom flat, 390,000 pounds. You cannot find that anywhere else. which can get you as conveniently to Oxford Street, so people love that for shopping, or to Canary Wharf in 31 minutes. I mean, I have another flat in Kensington. I have a tenant who works in Canary Wharf. It takes them an hour from Kensington High Street into Canary Wharf, an hour every day, each way. Whereas from Southall, it'll take them 30 minutes. So I think that's a really big driver for me. The phase one, so the developer working for me, the closeness to a station, and the connectivity. So those are the three reasons that I bought. In terms of the negatives, I kind of just touched on the negative. The negative really for me is the fact that I bought at phase one, so I'm going to have some construction continuing. That is a negative, but it's a short-term negative. I don't buy properties because I want to make income on it. I buy properties because I want to sell them and make a great big profit. And I hope everybody else should be doing the same thing. Because yields, 4.5% yield is fantastic. I don't really want that money because I've got to pay tax on it. So actually what I've used that money for is purely to pay down a mortgage. So yes, the rent will be a little bit lower. It may be 10, 20% lower than I will get after 3 to 5 years time. But after 3 years time when it's completed. But that's the main negative for me, is that my rent will be a little lower for that period, but that's not important. The important thing is your capital is protected and you will get a capital gain. So other than that, I can't see any other negatives. I mean, it's close to Heathrow. Some people view that as a negative, but actually this development is being built outside of the Heathrow flight path. So again, you won't get air noise. I mean, in fact, it's good near Heathrow because you get all the people that work there, not just pilots and stewardesses. I'm talking about the people that actually work in the airport. And South of Waterside is going to be the premium development for the area. So again, another reason why I bought. Anyway, Rob, I don't know if you've got anything to add to that, but
No, I think, I was just, reiterating the point that you made there, is that, a property investment should be for a medium to long-term investment generally. And you look at Southall Waterside, if you buy today, in 5 years' time, what is today, essentially a first couple of buildings coming up, in 5 years' time, you're going to have numerous more apartments around you. You're going to have a hotel. You're going to have various facilities, restaurants, supermarket, all of that commercial, the cinema, a new pub, all of that commercial that's been developed is all going to be there, within the next 5 years. So, it's going to be a community and a centre for Southall, and that's come from nowhere. That right now, the people that live and work and around the area can't necessarily appreciate. But in 5 years' time, everyone's going to be, I want to be near there because of the convenience that it offers me. I want to be in the brand new, sparkly flats and things like that. And so that's, having that sort of vision to see what is going to be created in just a matter of years is really where you'll see the growth.
Okay. All right. With that, I think that sums up our webinar for today. And thank you very much to the panelists, Marc and Rob. And for those who'd like to know more about this development, please call me here at this number. This is my Malaysian number. We're happy to meet up anytime on the weekend as well as the weekdays. And we are more than happy to share with you or have a chat or have a coffee. And thank you very much for attending and happy investing. Thank you very much.
Thank you very much.
Bye.
Bye.
Thank you. Bye.